Here's how I caught this trade on EU for a 1 to 2 risk to reward. And note how similar it is to this market maker sell model right there. Daily we're actually bullish, but we can see that we have a daily fair value gap and a daily order block that we can potentially retrace into. On the H4 we can see that we are actually starting to retrace. The 1 hour you can see that right here there was a London session trade that I actually missed out on, so we can ignore that. There was an invest fair value gap and then it respected that and continued downwards. But during New York, what happened was we created this order block right here as we closed below that candle, and we also have this fair value gap that was closed above and disrespected, but we respected that order block, so that was still okay for me. So after we respected that 1 hour order block, we also have this SMT right here with GU, and we also disrespected this bullish fair value gap right here, which is also bearish. So going down to the 5 minute, you can see that on the 5 minute, we were consolidating, going up, retracing into this 1 hour order block right here. This is that line, and creating an SMT. And then what happened was we created the first fair value gap that I didn't enter because it wasn't within the kill zone. So I waited, we created another fair value gap, and I again didn't enter because it didn't retrace into it. Then we had this accumulation here, manipulate into the 5 minute fair value gap, and I entered. To be honest, I entered a bit lower. You can see in the screenshot at the start of the video, I entered a bit lower, probably around here, and I had my stop loss a little bit lower as well because of that risk to reward, and I had my target here for 1 to 2 risk to reward. So in reality, my trade probably looked a bit more like this: stops covering above that fair value gap and just targeting that low.